Hello and welcome everyone to Let's Talk Farm Finance. This is a video series developed by us here at Compeer Financial to help farmers and agribusiness owners dig into the details of their business, specifically the financial side of their business. My name is Sarah Hetke. I'm going to be your host for this evening. I'm a communications consultant with Compeer Financial. And today we're going to be talking about beginning farmer loan programs. And specifically, we're going to be talking with Bob Forder. He's a financial officer in Illinois for Compeer Financial. And we have Kim Lipkiss with FSA. They're going to help us better understand beginning farmer loan programs and how Compeer is uniquely positioned to help young beginning and small farmers. So Bob and Kim, welcome. Let's start off by having you each introduce yourselves. Tell us a little bit about yourself and your role.
Yeah, good evening, everybody. My name is Bob Forder. I'm a financial officer out of the Rock Falls in Oregon, primarily Illinois locations for Compeer. I've been here about 15 years, believe it or not, and primarily work with grain farmers here in Northern Illinois.
Hi, my name is Kimberly Lipkiss. I am a farm loan officer for the Farm Service Agency, and I'm primarily stationed here in Oregon, Illinois, but we service the northeastern Illinois area. Obviously, you can find your local office within whatever county you are in. So we're pretty much a nationwide agency. So we're fairly easy to find.
Wonderful. Well, thank you both for joining us tonight. And for folks who are watching us live, feel free to drop your questions in the comments as we go through the conversation. I know there's a lot of questions about beginning farmer loan programs, so don't be afraid to drop those in the comments. We'll be monitoring that as we go through our conversation. So we're going to start off with a couple questions for Kim. Then Bob, we're going to transition to you to talk more specifically about some programming that Compeer has. So Kim, let's set the stage. Just give us the 30,000-foot overview, kind of the highlights. What do we need to know about FSA's Beginning Farmer Loan Program?
Yeah, absolutely. So the Beginning Farmer Loan Programs, we have two that we work with our lenders all the time, and we call them our joint financing programs and our down payment program. And they are used to help farmers purchase real estate. So we call them farm ownership loans. That's basically the gist of it all. We've got, like I said, there's two major programs that we use, and we finance things alongside our other lenders. And we've got lenders ranging from community banks to Compeer Financial. So we kind of work with everybody all over the place. And how it works is we kind of act as your down payment. We are basically your supporting system to get you in to let them lend you some money.
Well, it's great that that option is out there, because I know capital is one of the biggest challenges for young beginning and small farmers. So I think it's great that there is a program specifically designed to help folks get started. So let's drill down a bit more into the specifics. Are there acreage limitations, credit score considerations, income limits? What do we need to know?
So there's a vast amount of different requirements and stuff like that. Obviously, we're offering a subsidized interest rate, so there's going to be a few more requirements than Bob would probably have here. But the big overview is going to be, so on acreage limitations, we don't have necessarily an acreage limitation for a general farmer. We have acreage limitations when it comes to being classified as a beginning farmer, and that's county based. So if you're in Lee County, Illinois, you know, your beginning farmer acreage limit is going to be one number. If you're in DeKalb County, Illinois, your acreage number is going to be a different number. So that's very county based. But that doesn't mean that you're not eligible for the FSA programs if you own over that number or anything like that. It's just you would then not be classified as what we call a beginning farmer. Credit score, the benefit of really using the FSA programs is you don't have to have credit to use us. So if you've never had any type of credit in the past, your credit score is non-existent. We don't look at anything like that. We're going to pull a credit report, but that's not important to us. We just want to make sure that you're not, I don't know, got judgments filed all over against you or anything like that. And then income limits is a hard one to really say. We don't have an income limit. We have what we call a test for credit. So with what we are trying to do at the FSA is we're trying to help farmers that maybe can't get the credit that they need. So we want to help the farmers that need help. We don't want to be helping the farmers that are buying acres and acres and acres, and we don't want to be helping investors or anything like that. We're here for the family farmers and the beginning guys that need a little bit of help to get things going for their operation. So if you're too good for me, then, you know, just call your local lender. If you don't have a 35% down payment, or your cash flow is a little tight, or you're not, yeah, things like that, that's where the FSA comes into play. So no income limits, but we do have a test for credit, just saying, if you're too good for us, don't use government money, because somebody else could potentially, excuse me, could potentially use that and benefit from that as well.
Well, I definitely appreciate knowing more about what those requirements are, as I am sure our viewers do too, because like you said, there are a number of requirements, but it's really important that that program is there for people who need it and to help young and beginning and small farmers get started. So there's a lot of requirements there. I think you summed it up well. Definitely dig into the details more if this is a program you're interested in, but appreciate you making that very approachable and easy to understand. So next question for you is timeline. You know, I feel like I hear folks say, well, it's going to take so long, but what's a realistic timeline? I don't know what the time frame is for quote unquote so long.
Yeah, so I mean, I could tell you the best ones I've ever done and the worst ones I've ever done, but our goal is 30 days. So within 30 days of having a complete application, you should have an answer. We pride ourselves on beating that most of the time. So, you know, if I'd say, for example, I took an application on Monday, hopefully you've got an answer within a week of that application being submitted. Granted, that entails a complete application and all the details and stuff being disclosed at the time that we received the application. But yeah, so 30 days is our goal on paper, but on our office, I think maybe we compete with ourselves a little bit and we try to get it out to them as soon as possible. So short answer, 30 days, but we like to get it done as quick as we can. So we get a bad rep for potentially taking a long time, but that's not necessarily the case. It usually goes pretty quickly, especially if our guys come in well prepared and they're open to getting us the documents that we need and, you know, working with us pretty closely. It goes real quick and real smooth most of the time.
I have certainly heard that that is the key. It's, you know, us on the other side of the table, making sure that we have all of our documents prepared and we're ready to go and that we are giving you timely communication as well. Bob, anything to add to that timeline side, you know, as Compeer or, you know, a lender of choice would be coming in to partner on that. Anything to add to that timeline?
No, I don't think so. Yeah, I think a couple things. My experience has been the 30-day goal has been very easy to achieve with Kim's office and with FSA in general. Not to say people don't get busy, what have you, but it's generally been quicker than that. I think a lot of the process is just being well prepared. And I think, you know, if we have well prepared clients that have, you know, financial statements put together and cash flows put together, the process goes very smooth. I've certainly had very good experience with it over the years. We've done quite a few of them with Kim's office and other offices around the state here, and we've had a very good experience. I mean, I know there's sort of a stigma that goes with it that it's a clunky process or it doesn't go very smooth, and that's certainly not been our experience at all.
Great. I'm going to ask you one more question. Then we have had a couple questions come in in the comments. So as long as we're talking about documentation and being prepared, let's chat through what types of documents should folks be prepared to have and to present.
Yeah, so 3 years of tax returns, balance sheet, and a cash flow projection are my big 3 ticket items. So if you can come in with those 3 items prepared, it's a very easy process typically. You know, and those documents should be fairly easy to come by for most farmers. You know, usually prepare a balance sheet at the end of the year, do a cash flow projection at the beginning of the year, and your tax returns, your accountant or you've got them filed away in the filing cabinet somewhere in there. So those are your big items. We do require a purchase agreement for our loans. And then other than that, we have quite a few different little things that we will ask you questions on and stuff. But in our office, we usually come out to you and we'll go over all those specific FSA forms with you, and we'll do them face to face. That way you're not overwhelmed with them trying to do them on a computer by yourself.
Great. Well, we're going to take a question that came in on the comments quick before we continue on with my list. Mark asked, are these part of FCA and AgriBank?
No, we are USDA FSA. So your local, what did they used to call them? ASCF?
ASCS.
ASCS office. We're in there. The farm loan programs are a lesser known program. And if you've got farm loan personnel in your local office, I know in our office, we're tucked in the back, so people won't even really know I'm there unless they are familiar with my name. So yeah, every local FSA office will have some sort of farm loan personnel, and if it's not in the local office, they'll direct you to who it would be.
Great.
And I would say, oh, sorry, it's maybe important to explain to clients that it's really a two-part program. And so when you apply for a beginning farmer, whether it's a beginning farmer loan or a direct loan with FSA, it's really a two-part deal. And in a sense, you have two separate applications working at the same time. So you apply for your primary financing with your commercial lender. In this case, hopefully it's Compeer Financial, and we handle half of the transaction, and then Kim's office handles the other half. And essentially they're simultaneous loans that are really separate in a way, though they work together. And so they're, they're not really the same, even though maybe they work together that way.
Yeah, FSA takes on the riskier position. We take a second mortgage on things. So your primary lender finances 50%. We finance somewhere between 45 and 50% of your total purchase price. And that really, it's really the benefit cuts down on your down payment and stuff. So yeah, like Bob said, it's two loans that work very, very closely together.
No, I think that's a great segue, Bob. I'm glad you brought that up. I was going to ask how Compeer is equipped to help through this process. So, I mean, it sounds like it is a true partnership, but I think there's some more that we can probably dig into with that question.
Yeah, and so, when Kim talked about the financial requirements, her requirements are essentially the same as ours, right? So a current financial statement, 3 years of taxes, and a cash flow. And the first thing we do, if you're a young beginning farmer, you come into my office and you're interested in buying a farm, is we do a balance sheet and a cash flow, and we review 3 years of taxes. And so when we start the process at the very beginning, we're completing those items, and it makes the whole rest of the process go a lot smoother. With clients' permission, of course, we can share them with Kim's office and make that very easy in terms of providing the financial information that they require. And that takes a lot of work away, from the farmers having to do it again or repetitively, and makes the process go very smooth.
I can definitely see why that would be ideal. Work with your financial officer and they'll send it off for you. I think that sounds like it works pretty slick. So I know you have a spreadsheet that you wanted to show. So let's run through that real quick, and then let's talk some more about Compeer, but then we're going to move away from this program. So I'm going to get that pulled up if you just want to intro what we're going to be looking at.
Yeah, so I thought it'd be helpful, and this is by no means a fancy high dollar tool here, but to show a couple scenarios of how Kim's programs work, or the FSA programs work in conjunction with ours. So this is an example of a deal that I had done over the winter for a client of mine. The names have been deleted to protect the innocent, but I thought it would be helpful to show it. Now, obviously, interest rates have changed and things have changed since then, but it's a good sector. It shows the programs and how they work. So the top example is if a farmer qualifies or uses the quote unquote beginning farmer program. This is an example where the farmer's buying 40 acres at $10,000 an acre. They're putting 5% down and using the beginning farmer program. We're loaning 50%. FSA is coming in with 45%. So essentially you're receiving 95% financing. So for younger farmers that have very limited down payment ability, it's a way for them to purchase something, and yet the cash flow is, better than it would be with traditional financing. The second example is using the direct FO program or farm ownership program through Kim's office. And it is 50-50. So they take the borrowed a portion of the purchase, they divide it half with us and half with Kim. And their terms are slightly different, 40 years, I believe, at 2.5 still, right, Kim, on their portion. And obviously you'll see by looking at it, the payments are smaller that way. And it really helps out with cash flow when you're buying your first farm.
Yeah, and that spreadsheet, it does a good job of showing the subsidized rates that you would receive as a benefit through the FSA program. And like Bob said, the 40-year amortization, which most of your lenders can't offer that. So it kind of offers you several different benefits. And then it lets them feel a little bit more secure in what they're doing.
Great. Well, I think that was incredibly helpful to see the numbers. I mean, we've talked a lot about how it works, but I know when I was looking through that earlier today, I was really impressed by the difference that these programs really do make for, folks who are looking to get started. It really does make a difference in the payments that you're going to be making. And especially as we see whatever we're seeing going on with interest rates, anytime that you can get a little break on that is certainly helpful. So I appreciate you putting that together so we can see a real world example of how that works for folks. So let's continue on. Bob, we're going to keep firing the questions at you. So outside of the FSA programs that we've already talked about, what other opportunities are available for young, beginning, and small farmers from Compeer?
Well, yeah, we have a few different options. And, we call some of the programs we have here Groundbreakers programs that you may see advertised in some of the Compeer things, the Groundbreakers programs. And they're really things designed to help young, beginning, and small farmers. And, to not get too far in the weeds with that, we have relaxed credit underwriting standards for young, beginning, small farmers to make it easier to qualify for credit when you're just getting started. We have some grant programs available, which I think you can probably find information on the website about, or you could probably put it with this, Sarah, afterwards. You can get grants for things like 1 year of tax preparation. I've got a list here, attorney fees, FSA guaranteed loan fees, purchase of accounting software, things that, is your maybe a young beginning farmer, they're sort of expensive to make that initial investment, to help you get started. And then, other things would be, our more traditional offerings is, operating loans for young beginning small farmers, guys just getting started. So.
Absolutely. When we're all wrapped up here, I will drop a link in the comments to our webpage where folks can go to learn more about that. But with that, that's really all the questions I have for you. But where can folks go to learn more, both about the FSA programs and then what Compeer has to offer?
Well, so I'll let Kim, maybe explain where you can find FSA things. But, obviously contact your local Compeer office is a great place to start. I would say most people would be very knowledgeable of the programs that, are out there and would have an idea of who to contact or who your local FSA lender is. I mean, I advise my clients, if you're a young beginning farmer, you're thinking about buying a farm, you call up to the FSA office and talk through it with them first. I mean, I think they're a great resource, and obviously we can help a lot with the financials and some advising on our side, but also direct them to your local FSA lender as well.
Yeah, I would say, best option, contact your local FSA office. If you want more of an overview or surface level, without getting too in the weeds with things, that always go ahead and visit the Farm Service Agency website, and that you can find USDA.gov, and it'll link to all of our agencies and stuff from there. And then there's some links on stuff on there that can walk you through some of the overview of the farm loan programs that are offered and all the different programs and stuff. We've got the farm ownership ones are our main programs that we use in our office, and we do have other programs that are available as well. And so you can find some information about those on there. But like Bob said, your best bet, if you're looking at buying a farm or you're, real interested in them and you want to get things moving, I would contact your local FSA office. And even if even if there's not a farm loan personnel in that office specifically, they should be able to direct you to who would be able to, handle that loan.
Great. Well, thank you, Bob and Kim. This was incredibly helpful. For folks who are watching our Let's Talk Farm Finance series, I did want to mention we're going to change the format of these moving forward. So you're probably used to us coming on live. We are going to have recorded shorter videos for you in the coming months. So we appreciate your support. And as always, let us know what questions you have. We'll be monitoring the comments over the coming days, and have a great night.